If we look closely at the S&P 500 over the years, we can see that the U.S. stock market has never failed in recovering from any recession. We can clearly observe that the market could be down by 10, 20, 30%, or even more. But if we look at the charts, the market has never remained down for more than 5 years at a time, which is really good news for all investors out there. And this is because if you're patient enough to wait out a crash, you'd always make money. And if we see the U.S. stocks, we can notice that there has been an almost uninterrupted bull market since 2009, and the market can be seen reaching all-time highs almost every week. It seems that the market is in a bubble that will never cease. But can a bubble get so big that if it ever bursts, it would take too long to recover and investors would never be able to recover in their lifetime? What if the U.S. stock market does like Japan's stock market? And if you aren't aware of what happened to Japan's stock market, let's go back in time and look at what history can teach us. After all, history always seems to repeat itself, and if it does, maybe we will learn something and come out as winners. In this video, we will be going over what happened to Japan's stock market, see whether the U.S. stock market might be following the same path, and most importantly, how you can make money during tough times, so listen up. December 29, 1989 was the last day of trading of that year, and the Nikkei 225 index had reached an incredible all-time high of 38,915. Fast forward 33 years later, the index is still lower than it was on that day. While the Japanese were welcoming the 1990 New Year, the bubble burst, and the index had lost more than 38% of its value. After 2 years, it closed at 16,924, losing an additional 26%, and 20 years later, by February 2009, the index closed at 7568. By 2012, the Nikkei finally started recovering, and by 2019, it closed at 23,656, yet remained still 40% lower than it was 30 years ago. Japan is a free trading country and has a technologically developed market, not too different from the U.S. So what happened? And could this happen to the U.S. stock market? Between 1991 and 2001, Japan went through a period of price deflation and a stagnant economy, which came to be known as Japan's lost decade. Back in the 80s, Japan's economy was the envy of all world countries with an average GDP of 3.89%. The unemployment record was at an all-time low, and everyone could easily access credit. The Bank of Japan managed to maintain low rates, and companies took advantage of the easy credit to invest in the stock market and finance big capital investments. The real estate and land prices had risen by over 167% from 1985 until 1990, and the stock prices doubled from 1987 to 1989. The Bank of Japan hiked interest rates starting from the end of 1989, and although the stock prices started to suffer, the land and real estate prices were declining at an extremely slow rate. And because of the real estate prices' resilience, the Bank of Japan kept hiking rates. So what happened after the bubble burst? In 1991, businesses started to get bankrupt at an alarming rate, and the workers' wages massively decreased. During the lost decade, not only did the Nikkei index tumble down, but also real estate and land prices witnessed a downward spiral as they plunged more than 70% by 2001. During those years, the GDP of the Japanese economy reached 1%, and even after that lost decade was long gone, the Japanese economy still hadn't experienced any meaningful recovery. Can we witness something similar? Well, first, Japan's economy is fundamentally different from that of the U.S. The first difference relates to population growth. Japan has an aging workforce as people have fewer children, and foreign workers' inflow is limited at 1.5%, while the U.S. has a 17.4% foreign workforce. Another difference is that Japan highly relies on oil imports, leaving them in a precarious position. But this doesn't mean that we won't see another lost decade. So what can we do? Well, if you make just one investment at the very peak of the market, then you could lose money. But if you invest every single year, you'd be able to make a profit. Let's take, for instance, the years from 2000 till 2012. You would have made 4.6% total over the course of 12 years. If you include dividends, your return skyrockets to 32%. But if you consistently bought every month, your cumulative return jumps to 24%, and with dividends reinvested, your return would be as high as 42%. So averaging around 3.5% every year isn't that big of a profit, but during a lost decade, it isn't really that bad. So the lost decade would be lost for anyone who invests only once. So do you believe we'll have a lost decade and a bubble burst anytime soon? Are you going to keep investing? Let us know your thoughts, and don't forget to like the video and subscribe to the channel. We'll see you soon.